We see these numbers reflect the fact that you were able to earn more because you increased the number of stores that you have, and you also increased prices. Was it difficult to increase those prices?
You know, Godfrey, we didn't increase prices. It was more the fact that I think we did reasonably well because we had the right merchandise that appealed to the customers. Our inflation, in fact, was very low this year. It was only about 4% in our product. So our prices were not higher, but our product range was appealing enough to our customers to have a reasonably good year.
And in terms of the store rollout?
Store rollouts, we grew our space by about 6%. So that was slower than it's been for the last 4 years, which has been about 10 or 11% because there's less development going on. So a store rollout is part of it. But when I say grow space by 6%, at least two-thirds of that relates to expanding space in existing stores rather than new stores.
And in terms of the condition that you're seeing the consumer in, are you getting any sort of idea that perhaps things are beginning to improve and we're likely to see spending inching up and it being easier for you guys to be able to push through your merchandise?
Yes, we do find that whilst things are still difficult and the economy is still, the world economy and the South African economy is still a little soft, we do feel slightly more positive than we did a year ago. We are finding that our customers are paying us reasonably well, and we are trading a bit better than we were previously. So, yes, there seems to be a slightly more positive outlook than there was before, but it's certainly a long way to go, and it certainly is challenging still.
Michael, I have with me in the studio our guest host, and I'll ask them now to ask you questions out of you. I've got Patrick Matidi, he is from RMB.
Thank you.
Good evening, Michael. I see from your results, I mean, you've managed to expand your GP margins. I mean, is it a function of, again, your merchandising, or what was the trick there, if you may share with us?
Our gross profit margin only increased by a small amount, and that relates more to we bought reasonably good merchandise this year, and so the markdowns were slightly lower than last year.
Okay.
Michael, Derek here. I just got a question for you. Obviously, with these, I believe, very nice set of results at the moment, do you believe that this is a nice sort of base that we've got in place to see better things to come? You know, obviously, we're still sitting in a very tricky environment. Interest rates could remain low for some time, but do you foresee consumer spend starting to pick up as we move into 2011, which should set a nice base for you to track forward and do well from here out? Do you believe this is a nice base to work off?
Yeah, Derek, it's a good question, and it's so difficult to answer. I don't know. I only can say that, you know, the world economies seem to be so unpredictable at the moment, and it has such a massive impact on South Africa and therefore on all of our businesses that it's very hard for us to predict. All I can say is that internally in our own business, all our measurements and our yardsticks are looking quite healthy. Our stock is looking healthy, and our customers seem to be enjoying that. Our margins are in good condition, and our debtors book is very healthy. So those are normally good signs. But what's going to happen in the world economy, that depends, and that affects all of us so much. So we're slightly more positive than we were a year ago, but the future, who knows?
Michael, I see you adding in your outlook statement that in the first 7 weeks of the 2011 fiscal year, you're seeing sales up about 13%. Now, during the World Cup, did you get any sense that sales rose because of the visitors that were here? Did you get any sense foreigners were buying some of your stock?
Yeah, they were, sure. So in certain of the shopping centres where the soccer tournaments were, those stores did better than they would have. I have no doubt about that. But I don't believe that that was a major impetus to our sales in June. Our sales growth was reasonably good. We feel, however, that our June sales benefited more because there were school holidays for a longer period, and school holidays tend to be better for us being in the young fashion end of the market. So I do think that the World Cup benefited us to some degree, But as I say, it's more to do with the school holidays than the overseas visitors.
Now, you're talking also in that statement about a challenging year ahead, while at the same time we also have been getting a sense that just across the board, civil servants, not just civil servants, but workers across the sector have been able to get wages above inflation. Is there any of that is coming through your business, and shouldn't that improve at least your outlook going forward?
Now, that's an excellent point, and that's valid. Civil servants and some government employees have managed to get wage increases well above inflation, and that means they'll spend their money because many of them are our customers. We've got 2.5 million customers now, and many of them are civil servants, and we're very grateful to them. But of course, we all want the economy to be successful, and we want the world economy to do well. And as long as people who are getting higher wages are producing more and the economy is better off for it, that's a good thing. If they're not, then of course it's not necessarily a good thing in the long term.
So just to lead on to that, Michael, I mean, in essence, what I'm hearing is you need the employment base to grow for your customer base to grow, sort of accordingly. Are you worried that, despite this above inflation increases, that we're still hemorrhaging on the employment front, and therefore, sort of net, it's likely to present very challenging conditions for you going forward?
I've been running Truworths for about 20 years now, and we've been through many difficult times in our country, and our businesses had to survive through all of those turmoil and economic problems and yet opportunities. South Africa seems to be very resilient, and the South African economy seems to be very resilient. So yes, one's always concerned about world economy, minerals, all the various problems that we are challenged with, and also South African issues. But on the other hand, I do think that things are looking slightly better for us at the moment, and we're feeling a little bit more positive than we were before.
Michael, just lastly from my side, just within the retail sector, obviously you being in the clothing part of that sector, are you very bullish comparative to what we've seen and the rally that we've seen in a lot of these food retailers in the likes of ShopRite and Spars? Obviously you could argue that your clothing line being sort of a luxury item for many consumers out there, do you think that there's some catch up to play within the clothing retailers in line with what we've seen within these food retailers comparative to the food retailers?
No, I can't say that, and I can't relate to how the market sees the food retailers as well as the consumers. All I can say is what we concentrate on in Truworths is continuously, good on bad times, trying to give great merchandise to our customers. We keep our costs under control. We manage our book very tightly, and then we almost let the rest take care of itself. So I can't answer that question. I can only say to you that we're feeling more positive than we were a year ago.
Now, Michael, you of course import some of your stock from overseas. When you hear the minister and the government talking about the weakening of the rand, does that make you nervous? What do you say to them?
Well, I don't say anything to the government. I only say to you that if the rand weakens, we have more inflation than we've had before in our product. Our prices go up. It makes our clothing more inaffordable for customers. Of course, as you probably know, we have 45% duty, customs duty on finished goods that are imported into South Africa. So already that's a sort of a tax on poor people who can't afford clothing. So weakening of a rand and then 45% duty, that's not good for clothing prices. For our business, we cope. High inflation, we manage our range. We have different product ranges in our mix. We sell less units, but we get more revenue. So our business still performs well. But weakening rand and high duties cause high inflation in clothing, and that's not healthy for people, for consumers.